hope all of you are more than convinced after the whole day that beyond the traditional lie a world of alternatives out there. Some of these data points earlier speakers have quoted, and you may find some of the data points repetitive, but nonetheless, I thought it is important to reiterate it. These are some statistics comparing India to the global markets. So the global market cap is $70 trillion, the equity market cap. India is right now $2 trillion. If you look at the share of alternate assets globally, it's $8.8 trillion. It's a significant part of the global market cap. India, we are not even started. We are at $50 billion, which is 0.05 trillion. This is the size of the alternate industry today, the AIF industry today in India. Globally, there has been a rapid increase in alternate assets, and currently we stand at about $8.8 trillion. This is projected to go to about $14 trillion by 2023. And there is a rapid increase across the board. However, if you see the hedge fund space, that has really exploded. If you look at India itself, the total amount of private equity VC money has been growing over the years. Just in 2019, we saw $48 billion of private equity investments. This is the growth of the AIF industry. I think our chairman spoke about this very, very briefly. The category 2 space has really, really exploded. It is now worth 2.6 lakh crores, and this was close to nothing in 2012-13. And I do believe that this is a space which is set for exponential growth in the future. So this is a space that all of us as clients, as advisors, want to understand extremely well, because this is where the future lies. This is the growth of the PMS industry. Now, this number looks very, very large. I mean, it is about 18 lakh crores, but a large part of it, which is discretionary, is basically EPFO money. So if you see this distribution, about 13.5 lakh crores is EPFO. About 1.3 lakh crores is listed equities. Again, this was minuscule about a few years back, 5-6 years back. And it is evidence enough. If you see the number of PMS managers who were up on stage today, probably this would have been the industry 6 years back. And we are probably not even covering 10% of the industry today. And they're growing very, very fast. And I'm sure you must be getting a lot of boutique managers coming to your doorstep and trying to sell you their philosophy, their style of investing. So this is a space, again, which is growing very, very fast. And like Sushmit mentioned, in the US, every region has thousands of investment managers. And as India goes from a $2.5 trillion GDP to $5 trillion GDP, this is only going to accelerate. There are various investment themes that we heard today. We heard about commodities, we heard about private equity, we heard about real estate investing, we heard about long-short investing. So there are many themes out there, and the mode of investments today, you can do it on the PMS platform or you can do it on the AIF platform. All these avenues also offer the opportunity for clients to co-invest. Many of these opportunities will offer co-invest to investors, and that's another concentrated way of participating in some of these avenues. Now, we have a very unique process of selecting some of these managers, and that is where Motilal Oswal comes in when it partners with advisors like you. We have a unique process called 4C. We look at capabilities of the fund manager. More importantly, we look at their clarity of investing, clarity of philosophy, skin in the game. Again, we do like managers who align their own personal portfolio with their philosophy. And I can tell you with very high degree of conviction that at Motilal Oswal, we have significant skin in the game in all our products, whether it is private equity, whether it is real estate, or our listed equity funds. The last but not the least is the consistency in the approach and consistency in the return profile. So for that to happen, you need managers who have clearly long experience in investing in the respective asset class. So to summarize the day, I think passivization and search for alpha will drive investors as well as advisors to alternative investment avenues. If you look at the global example, what is happening is you're seeing the exponential growth of index funds. Now, why is this happening? Because the mutual fund managers are finding it difficult to generate alpha. There is a lot of money which was chasing mutual funds, and most of these mutual funds are more risk management products. Even if you look at India, an average mutual fund holds 50 to 75 stocks. So if you hold 50 to 75 stocks, unless there is a broad-based rally in the markets, it's very difficult to outperform the respective benchmarks. And even in India, we are seeing passivization happening at a very, very rapid pace. Already EPFOs are putting significant amounts of capital every month into index funds. We are gradually seeing even investors using indexing as a way to get equity allocation. So how do you create alpha in the portfolio? So this search for alpha will ensure significant growth in the alternative investment avenues or alternative investment platforms. So here you have PMS and you have AIFs as well as co-investment opportunities. The size of opportunity as compared to where the industry today is, I mean, if you ignore the EPFO mandate, the total size of the industry is about 4.5 lakh crores, right? Compared to the mutual fund industry of 26 lakh crores. And if you compare it to the bank deposit market, which is 100 lakh crore, and the incremental savings that we expect going forward of about close to $500 to $600 billion every year, the size of opportunity is extremely large. So my question is, are you ready for this opportunity? Now, to be ready for this opportunity, you need a deeper understanding of this space, because this is not as homogeneous as mutual funds. In mutual funds, you have debt, you have equity. Now, within debt, there are shades of strategies. Similarly, within equity, there are shades of strategies. But in alternatives, the choice or variety of investment avenues are much, much wider. So you need to understand asset classes ranging from commodities to private equity to real estate to long-short investing. Of course, where Motilal Oswal comes in is we have our unique process to select the right managers for you. And more importantly, we hope that this is the first year of MOCA, and this is a decade of MOCA or decade of alternatives, where we can bring you interesting managers every year to expand your horizons, knowledge, and give you a wider choice of alternative investment avenues. So I hope by now, think equities, think Motilal Oswal, I know is ingrained in all of your mind. Hopefully after today, you can also think alternates and think Motilal Oswal.